Hello, everyone. Good morning and good evening for those that are joining us today for today's webinar. Today, we have the opportunity to speak a little bit about the Portuguese Golden Visa Program. To start off with, I just want to introduce our colleagues that have joined us today. We have Tiago Vaz Serra from Plural Energy, and we also have Luis Gutman here, who's from the Terralis Fund. So to start today's conversation, this is brought to you by moviinn. I am the CEO and founder of moviinn, a relocation and investment agency that works to help people relocate and invest into Portugal. Here we work on three major stages, helping people with their research, making a decision to move to Portugal, deciding on where to move. Once that decision has been made, we move on to helping with the heavy lifting on all the legal work to make that happen until people arrive safely in Portugal, if that is the case. In here today, we are going to be discussing a particular service, a particular product, which is the Golden Visa Program, the Portuguese Golden Visa Program. As many of you know, is a program which has been around for more than 12 years now, going on its 13th year. In many cases, some people have heard the changes that have come across over the last couple of years. In some cases, people thought that the program had actually been extinct. That is not the case. The program is still very much alive and kicking, although there were some major changes in regards to removing the real estate investment option, which was one of the biggest tickets that started with the Golden Visa Program itself. So today we won't be talking about real estate, we'll be talking about funds, and more importantly, funds which are providing a positive impact on the Portuguese economy, and even more importantly, on our planet as well. Before we go on to speak with Tiago and with Luis, I just wanted to highlight some of the major benefits, let's say, with the Portuguese Golden Visa Program itself and the residency permit that comes with that. One question that we get a lot on a lot of the consultation calls that we have is, does one investment apply per person? Is it for a family? And with the Portuguese Golden Visa Program, yes, an investment is applicable to a main applicant, their spouse, also their dependents, including both minors and dependents such as parents who are over the age of 65. So this is a major benefit with the Portuguese program, so the whole family can benefit from the program and the residency. Another major question that comes up many times is, do I need to be in Portugal to be able to do this and get everything done? No, you don't. A lot of this can be done initially from abroad, remotely. So someone can go all the way up to getting their application submitted, making the investment and application submitted while in their country of residence, although we do always suggest that someone does come and visit the country if they haven't done so yet, before they move on to moving forward with the program itself. Another major benefit that we have here with the Portuguese Golden Visa Program is the flexible stay, or the minimum stay, better said. So in the Portuguese Golden Visa Program, the minimum stay is on average 7 days per annum over the 5-year program. And then as the program comes to the end, over the 5 years, you have the opportunity to either apply for residency permit, which is a permanent residency permit, or go on to apply for your citizenship and become a Portuguese citizen. So with citizenship, a big plus here is obviously holding that passport, that citizenship, that gateway to Portugal and to the rest of the European Union as well. Okay. So later on, we'll have time for Q&A regarding what Tiago might be sharing today, Luis, and around the program itself. So just to start off with, I'm going to hand it over to Tiago to give him the opportunity to speak a little bit about the Plural Energy Innovation Fund. Okay. Thank you, Tiago.
Thank you, James. Thank you very much for having us. In the name of Plural, we thank moviinn for this invitation to present our work at this webinar. I brought a couple of slides. Let me start by sharing what we do here at Plural. We have we are fund managers. We at Plural. Plural is an international financial company based in New York. The company was created back in 2012, and it is a regulated broker dealer slash wealth management slash fund management group, regulated both in the US and in Europe. I am in Lisbon. I'm located in Lisbon downtown. Uh, Plural in Lisbon has an asset management division in which I am one of the managers, and we have one investment fund eligible for Golden Visa that I will explain you a little bit what the fund does. First of all, explain you that the energy sector accounts roughly for 73% of total CO2 emissions, split between energy usage in industry, transports, and buildings. This is I would say, our main focus. The only focus of the fund is clean energy. And we created a fund, an investment fund, investing in decentralized renewable energy projects, meaning that the fund invests in small and medium scale projects. It's not utility scale projects. The projects are located in different parts of the country, and they normally include different kind of equipments, normally always solar photovoltaics, in some cases, depending on feasibility, electricity batteries, and also depending on feasibility and on existing demand, we can have electric vehicle chargers. In some cases, we can have other complementary technologies, but this is the three kinds of equipment normally present in one of our average projects. This is the scheme of the business model of this investment fund. The fund is it's an entity based in Portugal and regulated by CMVM, the local regulator here in Portugal. The fund owns one company only. We can call it an SPV. So the fund invests in only one company. If you see on your left, you have the clients of the electricity that acquire the electricity from this company called Plural Solar. So this company in the middle, Plural Solar, invests and owns the equipment. Then it celebrates medium and long-term contracts with the buyers of the electricity. Normally there's an anchor client in which the equipment is located, is installed, but then we have other types of consumers for the electricity, other community members under a legislation, new legislation in Europe for renewable energy communities, allowing the owner of the equipment to sell within a specific region, to sell the electricity to other consumers in the local region. And then we have a consumer of last resort, which is the electricity grid, the operator, which means that all of the electricity is always sold. So Plural Solar is the company selling the electricity to these different kinds of clients under these medium and long-term contracts. And Plural Solar, as a pure financial and investment entity, outsources to third parties everything except the management of the investment and the cash flow of the operation. So we acquire the development of the projects, the constructions, the O&M, insurance, we pay costs to the grid operator. And so this is the model which by the end produces an yield which is around 10 to 15% IRR during the life of the projects. So this is the yield that will be generated for the investors of the fund so that they can have profitability when they sell the shares of the fund after after the period to obtain the residency authorization. In this screen, you can see a sample of projects in which we already invested. So these projects are located in different parts of the country. In Portugal, this gives an idea of the typical project in which we invest. Located, for example, on your left, you have a project located in an industrial facility. Then we have another one in a business association in a site in which you have several other industries. So all of the industries around the solar panels, they are potential buyers of the electricity. Then we have another industry, Avelino, and then a non-profit institution in which we install the panels, and we are supporting the institution because they are acquiring the electricity at a much lower price than they would be acquiring from the normal commercialization company. So, of course, this model results not only in clean electricity being sold to several different clients, but always at a much lower price than the price they would pay to the normal operator that was selling electricity to the client. Not only a lower price, but also a stable price, because our model, since we celebrate on average 10 to 20-year contracts with the different players of each project, so they get a much lower price, and they know that each time the price will increase only as a result of the inflation of CPI of the country, and not because of any other factors related to energy prices. A few words about Plural, our company. As I already mentioned, we are based and headquartered in New York, in the United States. Plural has offices in other cities in the US, also in Brazil, in São Paulo, and here in Lisbon, where I am. Important to mention that Plural is a group offering several different financial services to its client base of more than 5,000 clients. Plural Plural's origins are as a broker-dealer company, but Plural also has a wealth management division and a fund management area. The fund management area is where I am located, here in Lisbon, and we launch and manage funds on behalf of our institutional and individual clients. Important also to mention, again, the fact that Plural is regulated both in the United States by FINRA and in Europe by ESMA. ESMA is the European Securities and Markets Authority, which means that we comply with all of the criteria regarding client protection, compliance procedures, etc. This is the management team of Plural Asset Management. We have as chairman Manuel based in New York. Manuel has 38 years of experience in investment banking. He was formerly a partner at BTG Pactual, the largest investment bank in Latin America. We have Rui, also with a very relevant investment experience in different banks, including Bradesco, one of the largest Brazilian banks, and myself, fund manager of this specific fund, but also manager of the asset management company. I have experience as investment manager, as angel investor, as venture capital investor, and so the three of us, we are in charge and responsible for managing the Plural Energy Innovation Fund eligible for Golden Visa. Now, very briefly, quick facts about the fund. The fund is a private equity closed-end fund, 10-year term. We can see this above, the second line, type of fund, private equity 10-year. We have the intention of selling the assets of the fund and returning the capital back with a profit to the investors by the years between the year 5 and 6, because then the assets will be de-risked and very attractive for a larger investor. But in theory, the fund has a 10-year term. Investors may be able to sell before the deadline. They just have to tell us that they want to sell the shares, and we reach a price and try to sell the shares in our network of clients. The objective formally is capital preservation with expected annualized returns above the annual average, long-term average of the S&P 500 index. This translates into a profitability net for the investors around 10% per year. Our objective is reaching 15%, but our base case scenario is 10 to 15. So it's in the middle, 12%, but that's our expected profitability. I remember that the fund invests only in one type of assets and owns the assets and owns the contracts to sell the electricity. So this is a low risk fund. The asset manager of the fund is Plural Private Equity, SCR, regulated in Lisbon. Then we have Ernst & Young as auditor. We have a geographical focus, Portugal and Spain, 60% at least in Portugal because of the eligibility for the golden visa. We have as a sector renewable energy, management team already mentioned. We have the normal fees for a fund of this type. So the expected profitability that I mentioned is net of fees for the investors. And this is basically it. Quick facts about the fund. The fund is already investing, so the fund is not a new fund. It's an existing fund, and we are finding that the fund is a very interesting for conservative investors that want to have a profitability associated with clean tech and the expectation for the approval of the golden visa. Finally, just to conclude my presentation, also important to mention that Plural has offices in different US cities, as I mentioned. So in case there is interest in talking physically to someone from our team, we have people in New York, in Miami, Orlando, and Chicago, the 4 US cities in which we have offices. In Lisbon, of course, where I am and the rest of Plural's team here in Lisbon, also available to talk to clients, and also in São Paulo, in Brazil. We also have the office in São Paulo with a team available to talk and to explain everything to the interested people in this golden visa solution. So this concludes my presentation. Once again, James, thank you for the invitation, and now I'm ready to answer the questions that
Yes.
someone might have.
So anybody that's watching us now, they can definitely share their comments and their questions in the comment section, and we'll be looking at that towards the end of the webinar. But in the meantime, I do have a couple of questions. Although the several questions that I had here, many of them have already been answered. You did talk about the profile of investors, and can you tell me a little bit more about the profile of investors? So that you've seen specifically in terms of those that are coming in as golden visa, looking for the golden visa and evaluating Plural as an option.
Yes, in our case, we have investors. We have more investors than the golden visa only. So we have actually our first investors in the fund were entrepreneurs from the sector of renewable energy. So people that analyzed our investment thesis, what we were doing, and they realized that this was a good option for them because they already knew the sector, the dynamics, the opportunities. And so this is one kind of investors that we actually have right now. experts in renewable energy with relevant experience in other geographies, and moving to Portugal, physically moving to Portugal and wanting to invest their savings in the sector. But the typical investor, theoretically, for a fund like ours, is a long-term investor that doesn't need to sell the shares in the next 5 or 6 or 7 years, availability to wait patiently, because we are investing the capital until mid next year. So in the first, I would say in the first 2 years, because the fund already started, but the first 2 years are investment years, which doesn't mean that there's no profitability being generated immediately, because it's project by project. As the fund grows, the fund will be investing in different projects. The projects start generating yield, but then we have the obligation to return, after the investment period, 100% of the cash flow of the year to the investors. So the investors will be getting every year dividends. Okay. And by the year 6 or 7, we will sell all of the assets that we own together to a larger investor or to another investor, typically an investor that has a larger portfolio and wants to grow. And since the assets will be de-risked, because we will have already some years of track record, we expect to have a very good selling price, and at that time return the capital to the investors fully returned. So the fund closes. Okay, the fund, although the fund has a 10-year maturity, expected maturity, our strategy for this fund, not as a company, but specifically for this fund, is selling everything when the deadline for the golden visa is completed, but also when the assets are de-risked, have some years of track record. They have still many years in front of them, because this kind of equipment, they last for 25 years at least. So this is long-term assets. And so we will be selling, generate a profit, and return the capital back to the investors with a very good profit for the investors.
Okay, great. That's great. Thiago, there was one other question. You mentioned this, and I remember when I was speaking to you and your colleagues. So what changed? What was the EU legislation that changed recently? That
allowing this.
Yeah, that's important. Why now?
Why now? Because it's something called the European Green Deal. It's a legislation package approved 5 or 6 years ago. Then it had to be transposed to the national legislation of each country, and Portugal already did that, and it's a very comprehensive and a package of legislation for different sectors of the energy transitions, etc. So, but in our specific case, it allows someone who owns and operates, for example, a solar or wind farm, if it's close to other potential buyers, allows the owner to sell the electricity generated to whoever is able to acquire in the surrounding area. 4 kilometers, 8 kilometers, depends on the specific situation, but allows something that it was before that was forbidden. Okay, so that's the new thing, allowing this effectively allows the decentralization of both the production and the consumption of electricity without having to go through the national grid. Okay, but it was before this legislation, it was not possible.
Okay, great. So that's why it's a great time for this industry, for this market. Great. I have one last question before we move on to Luis. You mentioned that you're investing in 60% in Portugal and then 40% in Spain, and maybe was it 60-40? Was that what you were saying?
Yes, at least 60. Yes.
And you said that also, for those that aren't aware, that the funds do have the obligation to be making at a minimum of 60% of their investments to, companies and businesses which are operating in Portugal, and then the remaining can be diversified in other markets. Okay, so that was an important one. Thanks for that, Tiago.
That's right.
And now we'll bring on Luis. Hello, Luis.
James.
How are you doing?
Good.
So, Luis, so while you were listening to our good friend there, Tiago, I now would like to give you the floor to share a little bit about the exciting things that you guys are doing at Terralis, right?
Yeah.
What does that, impact investments and in the VC realm, right? So we were having a chat there with Tiago about private equity and the projects that they've moved forward thanks to recent legislation that has been passed at the EU and even more importantly here in Portugal. So I'll let you share a little bit more now about Terralis, and then maybe have a look at a few projects that you guys have in the pipeline as well.
Okay, thank you, James. Thanks, Moviinn, for inviting me for this webinar, and thanks everyone for joining us as well. So I'm Luis. I am the managing partner of OW Ventures. We are an independent venture capital firm based in Lisbon, Portugal, and we manage funds with a focus on tech startups and innovation. And we have investments made in Europe, mostly in Portugal, and also in Brazil. And our management team has more than 15 years of experience in this sector. And we have made more than 70 investments so far. So that's a little bit about our track record and background. We are all engineers, and we come from the technology industry, and our focus is technology and innovation. So, and we believe that investing in tech startups is in this VC world is of course involves a high degree of risk, as you may know, but we also have a uniquely risk return profile. And this sector offers a great scalability and rapid growth potential. That's what we believe. And but I'm here to introduce the Terralis Fund. Terralis Fund is our latest venture capital fund designed to invest in tech and innovation for the sustainability sector. And we target startups in sectors such as clean and renewable energy, waste management, energy efficiency, smart cities, for example, agri-tech, food tech, and others. So subsectors within the sustainability industry. But our mission is clear in that regard. So we want to invest in technology that not only offer growth potential, but also drives to a more sustainable planet. And that's why we go beyond capital in our project here. So we also have within the Terralis Fund, we have the Terralis Fund Impact Program. So each company we invest, it's part of this program, and then we help them to develop and implement best practice in terms of ESG and sustainability reporting. So we actively support them to be more structured, transparent, and ready for scale, making them more attractive to follow on investments and also, of course, long-term success. And that's why we commit to the investors to deliver financial and performance reports and returns, but also measurable reporting on the impact we made. That's our commitment to the investors we have. And we have invested so far in several companies within the sector, companies from, as I said, the agri-tech, food tech sector, renewable energy, mostly in Portugal, and now for the Terralis Fund, as well as my colleague said, we are going to invest 60% in Portugal and 40% out of Portugal. And we already have a lot of companies in our deal flow, in our pipeline, to follow this strategy. And Portugal has a great DNA for sustainability and tech investments. I'm not sure if all of you are aware, but Portugal is actually in the vanguard of sustainability in Europe. So we are highly connected and committed to UN's SDGs, the Sustainable Development Goals, and we have a lot of targets and milestones to achieve for the following years, and a huge public support and also public funding for projects and for startups. So we believe that we are in a good timing, in a good combination of country, public support, talent here in Portugal, and a huge entrepreneurship ecosystem in Portugal to support companies to thrive and to grow. And that's why we decided to create the Terralis Fund. And we believe that's going to be a very important product for the investors, but also for the planet. So James, this is a brief introduction about the Terralis Fund. So your following questions.
Thank you so much, Luis. One of the questions that come up often is how do these sort of impact funds, or in this case impact startups, how do they perform in comparison to, let's say, those that aren't focused on ESGs and so forth?
Yeah,
Can you define that for us a little bit? There's this thing, okay, it's impact, it's doing great for the company, the planet, but what do the returns look like as well?
Yeah. This is a very important question, James, because recently we are seeing a lot of denial in terms of ESG and climate change and things like that. So we also believe that we are here in the mission of awareness, and this is important actually. And we target, as a VC fund, we have a target of return of 20% a year. This is the target of this VC fund based on the risk return model we follow. But answering your specific question about ESG, we believe, and we have a lot of data from Harvard, from Oxford, Merrill Lynch, Bank of America, a lot of companies published several research about ESG companies, saying that those companies have better return, they perform better at the long term compared to the others for several reasons. First is that they are companies that deliver impact, they are following ESG process, reporting, governance, and internal controls, compliance. So this mindset make them more reliable, more resilient, and more able to thrive in moments of change. So companies following those, I will reduce for ESG standards. They can perform better than the others because they have better operations, internal structure, because of the ESG model, for example. So we have a lot of research proving that or saying that, and we see this actually in our it's empiric for us. So we see that companies follow sustainability and to drive impact, they must deliver trustable reports, transparent, and this make them more resilient in our perspective. So they are better in terms of risks, and in terms of return, we keep that 20%, but we believe that they have lower risk than the others because of what I just said.
All the extra rules and regulations,
exactly,
that's pushed on them, right? So yeah, I guess sometimes as well, it's being the underdog can really help create that motivation to go the extra mile and to push forward. I had a question here as well. Why do you feel that impact investing is an important choice, or could be an important choice for someone in the Golden Visa program looking to make an investment? There are a number of other options out there in terms of we have donations. Nowadays we don't have real estate, but in other funds which aren't impact related. How do you feel about that? Why should a US citizen looking at making an investment at impact rather than an alternative?
Yeah, for sure. We have specific profile of investors that we believe that is a match with the Terralis fund. So people looking for VC products, of course, they must understand what is a venture capital investment, so the risks and also the potential. But it's of course really important to understand. But the ESG funds or the impact funds, donations are noble, of course. So but the impact fund, the ESG fund, the Golden Visa funds, we can generate returns, of course, preserve capital, and it's a long-term engagement with investors as well. In terms of VC specifically, as we engage with entrepreneurs, we engage with the Portuguese ecosystem of entrepreneurship startups. The investors also, they are able to connect with that network, to grow that professional network, but also to contribute with that industry, contribute directly to the economy, and and also to the sustainability of Portugal and to the planet at the end. So it's also a mission, personal mission. So we believe that. And ESG specifically, connecting to my previous question, James, we have that additional layer to the performance. So not only the VC performance, but the ESG has that layer of governance, compliance, controls, reporting. That for us, we believe that's important to consider as well.
Which is quite demanding, yes. Did you, Luis, were there any other projects that you wanted to maybe share? Is there something in terms of pipeline that you
Yeah, I can mention a couple of projects that we have invested previously and some that are in our pipeline for people to understand what is included in this. So first, people think about energy only, but we have a lot of different subsectors. For example, one of the companies we have invested previously is called Tecma Foods. I can mention their names because we are actually an investor right now. Tecma Foods, they produce protein, insect-based protein. So to fight hungry around Africa and poor countries, for example, they develop whey protein based on insects. It's sustainable in terms of environment, but also with huge social impact at the end. So we have also in terms of pipeline, James, we are focused on Portuguese companies at this moment, as we must invest 60% of the portfolio in Portugal, and we have companies in different subsectors, like companies that have fiber optics technology to measure several KPIs from the agriculture, for example, in terms of water needs, other things, to make the agriculture more efficiency in terms of consumption and also water management, for example. And we have companies developing circular economy solutions. So to avoid waste of things from people and also corporates, we have solutions to make objects reusable with some marketplace to people to rebuy it and then other things. So the circular economy, it's a huge subsector that we see now. And we have in Europe, James, some countries with specific DNAs for subsectors, like energy is really, it's great in Portugal and also in France. Food tech, for example, in Portugal, we also have a huge food and wine industry, but Netherlands is a huge region for that as well. So we are looking for startups around Europe to complete also the 40% we are going to invest out of Portugal.
Okay, great. Fantastic. That's good. Exciting stuff. So Luis, thanks for going over that with us, for presenting and sharing a little bit more. I think that we can bring Luis back in. There you are, Luis. Tiago, sorry. Good to see you again. I think what we can do now, we can look at some of the questions that we have, and we can go into the Q&A session for the last 10 to 15 minutes. I have a question which I'll answer this one here. I think this is from Crystal. Can you apply while in Portugal? Yes. So can you apply for the golden visa while you are in Portugal? Yes, you can. If you're here, on a visa waiver, the application, the submission can be done. The only thing is that then, in regards to a appointment at IMA in this case, our famous partners over there, it might not happen within that visa waiver timing. But if you were to come and you wanted to meet with Tiago and meet with Luis in person, and then get the program started, that can be done while you're here. Just keep in mind that then the time to the appointment might be more than the 3 months. Okay, 3 months being the visa waiver, right? So we have people from the UK, the US, Portugal, Oregon, well, US. I think this one is, we have a question from Glenn here regarding, I think this was maybe directed from what Tiago said, but it was, and what is the Portugal tax expected each year on the return? I don't want to put you on the spot here, Tiago, but I mean, in terms of dividends in Portugal, we're talking about 20% withholding tax. But in case of the double tax treaty, I think it can be reduced at times. It depends. Glenn, what we'll do is we'll reach out to you and send more detailed. We'll get our tax lawyer to send out a more detailed and customized answer to this question. But generally speaking, dividends there's a withholding tax of about 28%, but there is exceptions for non-residents depending on where you are and what the double tax treaty looks like as well. So Tracy, we have, my money is tied up in a tax-deferred retirement account. Is there an institution in Portugal funds can roll over into without incurring the 20% tax? There's another tax question. Tracy, in regards to this, we'll also get our tax lawyer to get back to you on that one. I'm not too sure. With the IRA, this is, so there was two from Glenn. In regards to the IRA, yes, Glenn, just to answer that, we have had a number of US citizens that have used their IRA in order to make the investment into the golden visa, but I'll tie that up and send them both out to you. I'll speak to our tax lawyer and we'll get a more detailed answer on that. Do we have any other questions here? So there is one from João. This is for you, Luis. The question here is, only agro-tech? Agro makes sense for you. I guess the question here is, do you guys only invest in agro-tech, which is not the case, right? The full spectrum of, I'll let you answer that.
Yeah. It's not, I believe that he's asking about agro-tech or agro as a whole. So agro is not included in our strategy. So agriculture, traditional agriculture, but technology applied for agriculture. That's what we call agri-tech. But also, as you said, other subsectors like food tech, renewable energies, but always technology and innovation. This is mandatory, of course, included in the fund thesis.
Okay, great. Thanks for that, Luis. There is another question here. How many years minimum? In a nutshell, in terms of the Golden Visa program, so it does have a 5-year duration. Someone's asking about the duration here for the Golden Visa program. There is a 5-year duration from you're submitting, and then the investment needs to be held for a minimum of 5 years. That also depends on the investment that you might make. There are many funds which require 6, 7, or even 8 years or more. But for the Golden Visa program itself, it needs to be held for the 5 years. And then at the end of the 5-year program, you are able to relinquish, in some cases, the investment, in other cases, not. And at that point in time, you can also apply for your either permanent residency or citizenship. Permanent residency, may come as a surprise to some people. There are some countries where dual nationality is not allowed. Therefore, they do opt for permanent residency rather than citizenship. Okay. Okay, that's all the questions that we have for today. For those that Glenn and some others, we will follow up with their questions and provide them with a more detailed answer in regarding the tax topics. Luis and Tiago, thank you very much for joining us today. It was great having you both on, and hope to see you again very soon.
Thank you, James. Thank you, Chad.
Ciao, ciao. Bye-bye.